Hi, welcome to the first day of tutorials for the Aerie Oscillator by Absidy LLC. This indicator is a next-generation momentum indicator developed to give traders advanced, clean, and early signals of momentum shifts and changes in the market. You can see the oscillator here at the bottom of the screen. It's comprised of 4 lines. We have a very fast green line, a yellow line that lags somewhat behind it, an even slower blue line, and the slowest line there is the red line. We have the 0 line highlighted with gray dots in the middle. This indicator is very to use as it only has one setting, and that's the length. The length in this indicator works just the same way as a moving average length. The larger it is, the more data it considers, and the longer the time signal is. And the smaller the length, the less data it considers, and the faster it seems to react. And of course the security code. If you're having troubles using your security code, please look at the installation video or get in touch with us. In our video today, we'll be using the default length of 100. So to start off our tutorials, we'd like to show you the most basic strategy that you can use to time momentum shifts in the market. And that's seeing when the green line crosses over or under the yellow line. Because the green line reacts faster to momentum shifts than the yellow line, when the green line is above the yellow line, that implies that the momentum is increasing. When the green line goes under the yellow line, that implies that the momentum is decreasing. And of course, when these lines are positive, it means that there is a positive momentum, and when it's negative, it means there's a negative momentum. However, if a momentum is falling, it does not matter whether it is in the positive or negative areas, as a falling momentum will be associated with a decreasing price. And likewise for rising, if the momentum is rising, it doesn't matter if it's in the negative or positive area, as long as the price is rising. So, with that in mind, let's look at the crossovers that happened on the 4-hour chart on the euro-dollar in June of 2019. At the start of the month, we have the green line going over the yellow line, which shows us that we have an increase in momentum. And if we had taken this as an opportunity to enter a long trade, we would have gotten in just at the beginning of the momentum shift and gotten out at just the end of the momentum shift, resulting in a decent profit. If we continued following this and just making trades where the momentum shifts, our next trade would have been a break-even short trade. Then at the end of the second week, we would have had a very profitable short signal. Here we had the green line going under the yellow line until the end of the second week, where an uptrend promptly began. Where if we had taken that as a long signal, we then again would have made a decent profit going long, just trading where the green line goes above and goes under the yellow line. The green line is faster than the yellow line, and so when it goes over, we treat that as a potential long signal. When it goes under, we treat that as a potential short signal. As that shows us that momentum is shifting in the markets. Then if we taken that as a short trade, you can see that we would have ridden that all the way until the second week of July for a reasonable profit. That got us out just in time before the market turned around. The way that this indicator works is that it needs a lot of certainty for the crossovers to happen, so it will give very minimal whiplash with very clean signals. It will catch momentum changes early, and because of how carefully it tries to avoid whiplashing signals, it operates with very high precision and very high certainty. So when it gives a crossover signal, you can trust that that is an area of interest where the market momentum is shifting. Of course, this is not the most perfect timing indicator, as it is only showing the shifts in momentum. Here in our next example, we're looking at the Russ 2000 index on the 15-minute charts in the last week of July 2019. On the bottom, we have the oscillator. We took the liberty of highlighting all the areas where the green line has crossed over and under the yellow line, signifying shifts in momentum. Please take a moment to pause this video to see where these regions correlate with the price chart above. And when you've had a chance to look at it thoroughly, we'll take these highlights off and then highlight the regions on the charts where these momentum shifts correlate to. From this, you can see the great certainty that these signals give. When the crossovers happen, it's an area of interest that lets us know that momentum is potentially shifting, whether it's positive or negative. Looking at the arrows on the top, you can see that even in range-bound situations, we don't have a lot of whiplash signals. It's very easy to read. In our next example for today, we'll be looking at the 4-hour charts on oil. We're still examining the same strategy where we go long when the momentum is increasing, as shown by the green line crossing over the yellow line, and going short when the momentum is decreasing when the green line goes under the yellow line. So starting in the middle of July 2019, we have a short signal that takes us from roughly $60 all the way down to $56, which is a decent short position with very minimal drawdown. Then, if we had taken that green over yellow crossover as a long signal, we would have been in a long trade until the end of the month, with one brief hiccup. This, all in all, might have resulted in small amounts of profit or a break-even trade. Then, if we had taken this crossover on the candle it happened, we would have entered a very profitable short position. Looking at where the momentum shifts, we would have gotten out of the short position at almost the very bottom of the trend, and then, if we had taken this as a long position signal, we would have gotten into a long trade with a bullish trend emerging. This would have taken us up to this area where we briefly got caught in a range-bound market. This is a decent profit, with almost virtually no drawdown. The trade that happened thereafter would result in very minimal profits or very minimal drawdowns. And with a decent risk management strategy, these could be all but eliminated. Again, if we took this last short signal, we would have entered into a brief short trade, resulting in very minimal profit before we got in our next long trade when momentum shifted bullish again. Since it's so important to know the exact moment that momentum is shifting in the market, we created the ability for you to set alerts. Simply go to the alert menu, click the Add Alert button, and for the condition, select Aerie Oscillator and then which lines that you're interested in. For the strategy that we first demonstrated today, you would have the first green line crossing over the second yellow line. Then select when you would like to get notified. In this case, we have only once. After that, we can choose how we want to get notified, and then the message that we get when we are notified. Then click Create. You will get this message. When you click Create, you'll have this message that shows up that warns you that this indicator can repaint. Just to be clear, this indicator and no other indicator created by Absidy LLC is capable of repainting. Our indicators never repaint. The reason that you're getting this message is because of the security function that locks our codes when you do not have the correct security code. When you have the wrong security code, the information that is given by this indicator is destroyed. That's why you're getting this repainting message. Just to be clear again, this indicator never repaints and it operates in real time and with just a little bit of lag. So click Continue. Now you have an alert for when the momentum is shifting on the 4-hour charts of oil. Thank you for testing out the Aerie Oscillator by Absidy LLC. We know that you'll be extremely excited with how well this performs in the markets. We look forward to giving you even more strategies tomorrow in the Day 2 tutorials that will give you even more advanced information about the market momentum. Thanks again for watching.